I almost gave up on trading about 4 or 5 months ago until I really sat down and I put in the work and I found this way to trade inverse fair value gaps that has been a huge game changer for me. It's made them so much more repeatable and honestly like it's just completely changed my trading and I really want to show you guys. I talked about it on TikTok a bit and I got a lot of favorites, a lot of people saying they wanted to see the YouTube video. So we're gonna go a bit more in depth here. I talked about it a little bit. Basically, what I do is I divide them into three different categories, okay? And those categories are continuation model, range model, and reversal model, okay? And by doing this, it makes it so that when I go into the market every single day, I know exactly what I'm looking for. I just identify my draw on liquidity, and then I wait for one of these models, and it basically refines how you know which one is going to actually work. Because I know if you trade IFVGs, like, bro, we can. I have the chart up. We can go in this market. I could show you 1,000 IFVGs here in like 20 minutes. How many of those played out? Very few. Like, not every single one plays out. Even if you know the draw on liquidity, a lot of the times you still get stopped out. And by defining them into these three categories, I made it so that you can know which ones will play out and use it as an entry model that you can trust. You can trust your stop loss. If it doesn't play out, the draw on liquidity is probably wrong. That's the key here. Before, I would have the draw on liquidity right, and I would still lose because my entry model was not refined. I didn't know which IFVGs will actually play out. So I'm excited to show you guys this. Something that I've worked on, and I think it'll really help a lot of people. Um, so this right here, we're gonna start off continuation model. Oh right. So if you want to see daily updates and examples of every single version of this model, continuation, range, and reversal, you can see these are from today. I'm gonna just put every single example I see of each one in my Discord. Link will be in the description of this video, so just go join, talk to me. You know, I love talking about trading. Follow my TikTok, subscribe, whatever. But let's get into it because this is some cool stuff. So this is a reversal model. This is kind of the one you always see. Like this is like what Dodgy takes, his classic like data model. It's usually a reversal model, and it works. Like I like it. This is the one I take the most probably, just because of the benefits of it being high risk to reward. You'll see when we get to range and continuation. They aren't always high risk to reward. Like you can get some good RR trades, but not like a good reversal model. So obviously, this is a long example. All of the drawings I have made are bullish examples, but you can just flip it for bearish. So the key thing with the reversal model is you don't have to worry about premium or discount because we're in an implied discount by running below sell side liquidity into this high time frame key level right here. And when you do that, you're in an implied discount. So you don't have to worry about that. And then basically like this is also very time based. I only trade at three times during the day: 9:30, 10 a.m., 11 a.m. Um, this we'll get into the other ones. Each one kind of has their own time that really works. Like you'll see, reversal models really only happen at 10. Sometimes you get a good 9:31. I'll show you. I took a good 10 a.m. one today, and basically the idea is this is like 9:30 right here, and we come down, and then this is around 10. You get that inversion. This one really simple. Like you'd go long here, stop loss down here. You can partial here. You can partial out the opening range high right here, but your draw liquidity is gonna be your final TP. And I really like these. Just because again, high risk reward. Look at that, 2.4. I know this is fake, but they're really high risk reward because they let you get in early in the move because you're longing before price even comes into a premium of this range. Like you're getting in on that discount, which that's what the main strength of reversal models compared to range and continuation. But yeah, like simplifying this, like you don't want to be taking this here, right? You want to wait for the sell side, that time frame key level. This is probably the simplest one, and honestly, you can get by with just this, like just looking for reversal models and blocking out all the noise. This is great. Um, but one thing I found with this is the frequency is pretty low, which you know I don't mean to be impatient, but sometimes with funded accounts, it's really hard when you have low frequency, high win rate, high RR, sorry, trades because like, you get a couple of these a month that passes your fund. Like it's hard to actually pass and get through fundeds. And if you're really looking to quickly pass fundeds, that's when range and continuation is going to be huge because those show up honestly every day. And the key thing here is honestly time. Like reversal models are really good at 10 a.m. And I kind of have a filtration system where 9:30 will open. I'll look for a reversal model. If we don't get it, then I wait for the 10 a.m. reversal model. If we don't get it, then I start looking for range and continuation. Sometimes I'll take a continuation or range model. Usually not a range model. Sometimes a continuation model between 9:30 and 10. But we'll get into that. And I want to show you guys an example of a reversal model that I took today. So on the 3 minute. Um, so we did not run the opening range high. We ran this pre-market high right here, and we inverted this. And I posted executions of this on my TikTok. I did actually take this. And yeah, when you take a reverse model, you want to take profit at the opposite end of the range, right? We ran this high here. This is gonna be your first TP. I closed half there, and then the rest got stopped in break even, and I was starting the relative equal lows. This is a plus reversal model. Like we're delivering from 1 hour for value gap, high time frame key level, ran buy side, reversed right at that 10 a.m. macro. You love to see that. Really great trade. And then yeah, I mean that's really it for reversal models. This is one of the more simple models, but just like recognizing when it's a reversal model and not a retrace is really key here. And the main thing that I do is I really don't like to see low time frame for value gaps getting respected. So like right here, we inverted this 1 minute. I didn't take it. I waited for us to invert on the 3 minute, and that just gave me more confirmation. Ended up playing out really well. And yeah, like I said, these are great for higher RR. Like you saw, I mean, this was a much higher RR trade had it hit full TP, but even this, it was decent RR. I know this is 1-to-1, but uh, with the in profit stop loss is higher than that, and like the full TP was like 2 RR. So these are nice higher RR trades. You really want to look for these around the 10 a.m. macro. That's really the only time I ever see them, right? Like sometimes like here, had we ran up here and then gone for the data low, sure. Um, and that would have been a good trade, but again, I just want to take it. And something I just want to point out, like why this is good. Why, like the whole point of this video is to show you why you need to divide these into categories. Look at this right here. We inverted this for value gap. Define this as a reversal model? No. And you'll see this is not a range or a continuation model. So it just lets you avoid bad trades like that. Let's get into, I believe I have range next right here. Yeah. So range is more when you're in consolidation. So really the key here in figuring out which type of model you're looking for is one time, okay? Range is really good at the 11 a.m. macro. There was actually one today. I didn't take it because I was done for the day after winning that trade. And I wasn't really too fond of the draw on liquidity. But range are really good at 11 a.m. These are really good at 10. Continuation are really good at everything in between. Um, but the main thing to differentiate, and honestly, this is a huge just overall trading tip, is recognize what price is doing. Is price running liquidity? If yes, then you're looking for a reversal model. Is price consolidating? Okay, then you're going to sit on your hands and you're going to wait for a good range model. Is price already aggressively seeking liquidity? That's when you look for a continuation model, which again, we're going to get into. Range model, the key here and the main differentiating factor between this and a continuation model is that you don't have to have inverted all PD rates to the upside, whereas you'll see in continuation models that is a criteria. So like say this fair value gap was getting respected, that's fine. We ran into a discount, right? You don't have to worry about implied discount on reversal models. Or I'm sorry, you are an implied discount on reversal models. On a range model, you want to see it go into a discount. So right, so we're working in this range. This would be good. Say you miss a 10 a.m. reversal, and this is around 11, right? You've made this high, run up at 9:30, down to 10. Again, these can be flipped for bearish. And you kind of consolidate, we respect this. Okay, you run this liquidity. Now what you're gonna see is if we disrespect this is gonna be your range condition. I learned that from Adanomics. I'm not taking credit for it. He's a great trader. And I kind of just use that to build the range model. This is gonna be your range condition. If we respect this after running some minor sell side, doesn't have to be like super important sell side, just run out some stops. If we respect this and invert a fair value up, then you can trust that this is a run on liquidity, that we rebalance here. We are not coming up here to retrace. We are disrespecting that fair value gap, and we're going higher. Here, I always close at the range high in full because usually when you get this, like this is good enough RR, partial here, TP here, that's great. It really depends though. Like today we had those relative equal lows. If I had taken a range model, bearish, probably would have held a runner. But most of the time, you're just looking for that range high or range low. And once you get it, just close in full. Usually good trade. And yeah, but the thing is here, had we disrespected this, okay, fine, you're wrong. You know, don't trade. That it's as simple as that. You disrespect the range condition, you just sit it out. You wait for the next trade. Wait for the next session, wait for the next day, whatever. You don't force it. Um, but here, like we respect that. We come higher, we invert that. That's your IFVG. And again, I'm going to show you, say there is a fair value gap right here. Categorize this. We haven't inverted this. We aren't in an implied discount. Sure, I mean, say this was a little higher. Say we're in a premium. Um, this isn't a range model. This isn't a continuation model. This isn't a reversal model. So you don't take this trade. You sit it out. It doesn't fit into any of the categories. Boom, you just saved a loss. Saving a loss is worth twice as much as a win. I always tell myself that. I don't care if it's mathematically true. It's more of a psychological thing. You just avoid a loss. That's what these categories are for. You avoid those bad for value apps. Say there's one right here. Okay, you didn't run minor, so minor liquidity. That's why this one didn't run. You didn't run the stops, or you didn't come into this fair value gap yet. You didn't come into your range condition. You know, and it just saves you trades. That's why I love this. I'm gonna show you guys a really good range model that I saw here. I put this in the Discord as well. We ran out this minor sell side right here, and we disrespected this gap. But if you look, this is an order block right here. I believe this is yeah, we come into this order block as well. But really, just the fact that we ran that minor sell side right there. This would actually be a range condition here, right? Because it's the final fair value gap. So you're okay with us inverting this. And again, this is another thing. You take this inversion, what category does it take? Does it fit into? This one right here. Which one? None of them. We didn't run sell side. We didn't run minor buy side. I mean, we didn't run major buy side. So it's not a reversal. It's not a range model. We didn't invert this yet. It's not a continuation model. Boom, you just saved yourself a loss by not taking this IFVG. Instead, you wait. You get this bullish one. We invert here. Look at the time. Right at that 11 a.m. macro, we come down, run that, invert it. Boom. Opening range high up there. Partial at these equals. This is an awesome range model. I honestly, if I hadn't taken this short here, like if we didn't have these relative equal lows, I would say that this is A plus. But mechanically, this is a good trade. Just because of the range model right there, but it's not the best round on liquidity, which is again why I didn't take it, and because I was just bearish on the day. But this is a great example of what you're looking for if the draw was higher, which actually was here. It does play out, but that's not the point. Really good range model. Again, like it just saves you from taking bad IFVGs like this, like this. It just saves you from that because you just ask yourself, which model is this? Oh, it's none of them? Don't take it. Boom, done. Save yourself a loss. Like it's that simple. Um, Last one, continuation model. So this is when you've identified that price is already aggressively seeking liquidity. So usually you want to see like a run on like some sell side or something like right here. And you've disrespected all of the PD arrays within this range right here. And you know that this is going to be the draw, right? The key here is that we've disrespected all PD arrays. If we hadn't done that, then right here, when we invert, this low is not safe, right? Because, we could be respecting that PD array. Oftentimes, this is probably the lowest win rate, highest frequency setup, the continuation model. Like I could show you a bunch today, but they aren't super high win rate. These are great if you miss a range model or miss a reversal model and you're very confident in your drawn liquidity. You can get in a quick continuation model, quick scalp, get quick low 1R here, break even here, whatever. Take profit up there. The key difference between continuation models and range models is that we don't go into a discount at all here. See, we're still in a premium of this range right here. And we invert that, you come up, you run the drawn liquidity. It's okay that we're in a premium. Why? Because we disrespected all of these P rays here. Like that's the key with continuation models, and that's the difference between reversal models. That's why these are higher RR, because you don't wait for all those to get disrespected. That's why you have to wait for it to be in a discount, because you could be respecting that, so you want to get in a discount so that you have higher RR to um, increase your expected value. Because the odds that we're respecting this actually decrease the win rate of this trade, so you want to have higher RR to make up for the loss EV of the reduced win rate. But this, the odds of this being here are super high, so you can have a bit lower RR. You can even take partial, like sometimes I'll even take some negative RR partials, and I'm just okay with that because it's profitable. I back tested it. I'll make a separate video and we can go over the FX replay statistics. Obviously it's very dependent on drawn liquidity, but this is a profitable system. I trust myself. I trust my system. There wasn't really any super good continuation models today. The only one that I saw that was decent was this one right here, where we inverted all of this. Say you missed the range model. Okay, fine. There's this for value gap right here. Nice little volume imbalance. We've disrespected all of the PD arrays over here, so 1 minute for value gaps. We come up, we invert that. You can trust us low because we respected the fair value gap, and we're actually in this big IFVG here. I don't know why I have this here, but all right, that's the final PD array. That's another one. If you re-deliver to the final PD array, that's a good spot to take a long or short off of, and then boom, opening range high there. Again, the key thing here is the draw was actually bearish. Like I would much rather have looked for a continuation model in this, but see how we just didn't get one. And that happens. And another thing, the continuation model is the only one that I'll look at the 30-second or the 15-second. Everything else, 1 minute, 2 minute, 3 minute, sometimes 5 minute. Um, I don't love the 5 minute. It's different. It's a different setup for sure. Becomes more of like a swing trade. I really only do that when I'm confident in where the daily candle will go. Other than that, it's mostly scalps. So yeah, I mean, those are my three types of IFVGs, and I'm telling you guys, if you simplify them into these three types of IFVGs, your trading will change so much. Like I've been so consistent lately. I haven't taken a loss in 2025 yet. Doing really good. And it's because I know what I'm looking for, right? Like I I'm able to just easily filter out so many bad IFVGs that before maybe I took a loss on, and avoiding losses is huge. Even avoiding like 1 or 2 losses can change your trading so much because you lose one, now you revenge trade, you do whatever. It just throws you off so much, and you have to win twice to get back to where if that had been a win. So avoiding losses is huge. I see an IFVG, I ask myself, is it a range model? Is it a continuation model? Is it a reverse model? If all of those are a no, then I ask, is it in line with drawn liquidity? If that's a yes, I take it. I don't think about it too hard. I have it defined. I trust that that's profitable, and it helps me from second guessing if that is actually going to be a winning trade. I know that those models are profitable, and I just trust my drawn liquidity. If it doesn't play out, I journal it, I learn from it, but I don't overthink it in the moment. That's a big thing, guys. Don't overthink it in the moment. Go back and learn from it later. It's huge. Just when you're trading, just trust yourself, learn from it later. Go journal it. Yeah, once again, go join the Discord. Love to talk to you guys about this. And I'm gonna be posting all these examples and whatnot. And I'll definitely be making more videos, probably some trade recaps. I love talking about trading. Like, talk to me about it. Message me on Discord, whatever. Message me on TikTok. I have the link tree in my bio. I have my Discord linked here in the description. Join up. It's free. I don't charge anything. I don't do that. Like, I'm not qualified to do that. I'm qualified to talk about things that I know about and have fun with it. Like I'm just learning just as much as you guys, and I want to help you guys out too. So I hope you enjoyed this video. Drop a like if you did. Yeah, join the Discord. Talk to me about it.